Hi everyone, I'm happy to see you here. My name is Zolot. I'm a professional investor, and this is the first English webinar in my life. I'm a little worried about my Russian accent and about mistakes that I can make because English is my second language. But I really believe that this lecture will be useful for you because I will share with you my 15 years old experience in business and in investment. I like Warren Buffett. I like best investors in the world, and I try to take their experience and use it in my own strategy, but make it, more modern, using AI, using data science, use some other tools, use psychology when you negotiate with the founders of different companies. So let's go. I want to walk you through our investment philosophy, what I call big money in small companies. It's a comprehensive strategy that combines public market investing and investing in small, high growth private businesses. Let's dive in. Before we begin, a quick disclaimer. Nothing I'm about to share should be considered investment advice. Investing, whether in public markets or in private companies, always involves risk, including the potential loss of capital. Never invest your last money, never invest borrowed money. That's critical to understand. That said, the approach I'm going to share reflects how, in my view, the best investors in the world actually operate. In everything I've done in business and in investing, I always focus on studying the best, understanding their strategies, learning from proven benchmarks. I'm going to share reflects how, in my view, the best investors in the world actually operate. In everything I've done in business and in investing, I always focus on studying the best, understanding their strategies, learning from proven benchmarks. Everyone, whether you are an entrepreneur, an executive, or just someone with extra capital, starts thinking about investing. And when that happens, I've gathered a lot of insight, and today I'll try to break them down for you. At some point, everyone, whether you are an entrepreneur, an executive, or just someone with extra capital, starts thinking about investing. And when that happens, people usually face the same question. How do ordinary people solve these problems? Who do you trust? Where do you get reliable knowledge? What should you actually do? There is no shortage of bloggers, courses, trading experts. You can also try to figure things out on your own, read online, even use AI. But the problem is most of the information out there is either contradictory or too much general. You hear things like trading is risky, but you can make easy, fast money. Some people ask their friends to give them advice. Of course, this not professional advice leads to losses. If you are already wealthy, you probably have access to private banking. You have a relationship manager and he sends you presentations, structured products, opportunities, exclusive. But here's the key issue. The people selling these products don't invest their own money in them. Banks operate on sales targets. These products are designed to generate high margins for the bank. As a result, you either barely break even or underperform the market, while the real profits go to brokers and banks. Their mission is very simple. It's commission. So what happens in the end? People typically fall into one of two outcomes. They either lose money or they decide investing just isn't for them. They go back to focusing only on their businesses, avoiding investments altogether. And by doing that, they miss out on massive opportunities. But there is another path, and it's actually simpler than most people think. It starts with understanding your current position. That's the foundation of smart investing. I won't go into things like the cash flow quadrant, you probably already know that, but there is one critical question most people ignore. How much your capital is truly liquid? Money you can access immediately, today or tomorrow. Many people are heavily invested in real estates, locked deposits, complex financial products, and they overlook liquidity. You might look wealthy on paper, even be a millionaire, but if you don't have access to cash when you need it, that can lead to serious problems. Even forced asset sales at discount. And another key question, how much do you actually need to be happy? Because realistically, even very wealthy people rarely spend more than $50,000 monthly. So if you are already making around that level of income, you are effectively in the top 1% globally. The real question then becomes, what size of capital do you need to generate that level of income consistently? Ideally, your passive income should exceed your active income and your monthly expenses. That's when you achieve true financial freedom. And to get there, it helps to have a professional by your side. But as we discussed earlier, most people in banks and brokerage firms are great at selling, not at investing. Very few actually outperform the market. Statistically, only a small percentage of fund managers beat it, the majority underperform. So, how do you know who to trust? The answer is actually simple. Look for the people who built their wealth through investing, not through commission. People who invested in one company, then another company, then another company, and consistently grow their capital over time. Let me introduce myself. I built a portfolio worth over $16 million through investing in both public markets, private companies. And this is not money under management. This is my money. You might recognize some of the industries: dating, micromobility, food and beverage, robotics, consumer products. We are also built an AI-driven analytics team for the stock market called Ranks. I will talk more about that shortly. I did it in Russia, and if in US you play on beginner level or maybe maximum advantage, in Russia, if you try to make the same, you play on berserk. So it's too much harder because of interest rate, because of sanction, because of everything, because of war, and everything what happened now. But it didn't broke me. And I achieved my goals. I became a millionaire, and I did it on investing, not on commission. So we didn't just survive. We significantly multiplied our capital and capital of our client. So I believe we've learned a few things about investing, and I'm really happy to share it with you. Of course, none of these results were achieved alone. We have a strong team, and I've built it by focusing on key things: finding great investors, people who actually know how to allocate capital. At the point, we significantly outperformed our own expectations. We initially aimed for 20% returns and ended up delivering over 200%. Now, obviously, we don't promise those kind of numbers. But what made it possible was deep market understanding, concentrated investment, and the ability to wait. Patience is critical. Today, our team is global. People are spread across different countries. We've moved toward international markets, which was always the goal. And we still have around 190 shareholders who continue this journey with us. How did we manage it? It's simple. Study the best in the world. I followed this principle since childhood. I became a chess master by studying world champions and playing against strong opponents. For example, here on this photo, I'm playing with Fabiano Caruana in St. Louis. He's a 4 times or 5 times US champion and one of the best players in the world. Who are the best investors of all time, and how did they invest? You quickly come across names like Ray Dalio, a master of macro trends, Warren Buffett, a living legend who delivered around 19% annually for over 60 years. Peter Lynch, who went deep into companies, talking directly to employees and customers to get some legal insights. And of course, Jim Simons, who brought scientific thinking into investing through Renaissance technologies. He hired mathematics, physics, data scientists, not traditional Wall Street analysts. That's very similar to what we are building with Ranks and Impact Capital, a team focused on data science and AI-driven investing. How does it really work? What these top investors actually do? Here is some interesting. They rarely invest heavily in real estate. Even Warren Buffett, who could buy entire cities, still rents office space because he believes capital can be used more efficiently elsewhere. Bonds, mostly used as a parking tool, not for real growth. The core of their portfolios is stocks and private businesses. That's where the best balance of risk and returns exists. And crypto? Most top investors avoid it as a core strategy. It's simply too volatile and unpredictable. Another important point, top investors don't treat investing like a game. Buffett has said many times, you don't make money by constantly trading. You make money by buying strong companies and holding them long term. That's exactly how we approach investing at Ranks. Yes, we do some midterm trades, but our main focus is long-term position. Ranks is an independent product. We've licensed as a registered investment advisor in the US and also regulated in other jurisdictions. Today, our main focus is global markets, working with investors who want exposure to international stocks. How does Ranks actually work? We follow a structured top-down approach. First, macro analysis, global trends, geopolitics, big picture movements. Then we go deeper, countries, industries, specific sectors. After that, we analyze individual companies and build a short list based on fundamentals. At this stage, AI helps us rank companies from 0 to 100 based on multiple factors. Then our analysts step in, review the shortlist manually, and bring the best ideas to our investment committee. We meet twice a week to decide what to buy or sell. And the system keeps improving over time as more data comes in and we refine how each factor is weighted. Now you might be thinking, okay, this all sounds great, but what should I actually do? The simplest next step is this. Reach out. There is a form below. You can share who you are, your approximate capital, and your contact details. From there, we connect and look at your specific situation. We will figure out whether we can help improve your results and whether private investments make sense for you. A few months ago, I was on one event in New York. And I talked with lots of entrepreneurs there. And I was surprised that maybe half of them don't have broker account. It's very strange. As for me, I think that everybody must have broker account. And from this half of people, only around 10% were actually using it effectively. That's surprisingly low, even among experienced entrepreneurs. So if you don't have one, that's your first step. Open a brokerage account. And here, something important. A broker is just infrastructure. You don't need to rely on their advice. What matters is access to a wide range of stocks, low fees, and the ability to use moderate leverage when needed. For example, during major market drops, that's when the biggest opportunities appear. That's when we invest aggressively, using available capital, and sometimes adding moderate leverage. But carefully, not excessive risk. Another common question, do you manage the money directly? No, we don't take custody of your funds. Ranks is a technology layer on top of your brokerage account. Your money stays with you, but portfolio decisions are managed by a professional team working full-time on this. We typically start working with the clients from around $100,000. If you are below that, you can start with our subscriptions channels and follow our strategies. Many clients begin smaller, see results, and then scale up. For example, someone starts with $100,000, earn 20,000, then invests 1 million and continue growing from there. Some also allocate part of profits into high risk, higher upside private investments. And the next level, our strategy is different from what's usually promoted. If you are relatively young, some 30, 40, even 50, you can take a more aggressive approach. For example, from 50 to 70% in liquid assets, 30% in high potential private businesses, ideally businesses where you can also add value, connections, expertise, strategic input. This approach accelerates capital grows. And honestly, it also makes the journey more interesting. It's not just about money, it's about engagement. When it comes to private companies, timing is everything. Top investors rarely invest at the idea stage. The best entry points is around break-even. At that point, the business model is proven, the company isn't overpriced yet, and growth is just beginning. Late-stage investing, like pre-IPO, is often less attractive. Valuations are high and upside is limited. In many cases, IPO is actually a better moment to sell, not to buy. Looking at our own track record, out of roughly 40 investments, about 20% failed completely. Around 60% were average. About 20% became major winners. That's where the real returns came from. One of our companies is now approaching $100 million in revenue with strong profitability. And just one big success can offset all losses and generate significant overall returns. We divide investments in two categories: cash flow businesses, stable, generating consistent income, and unicorns, high growth companies with exponential upside. Both play an important role in the portfolio. This brings me to a key idea: big money is made in small companies. That's where the real growth happens. Let me show you a few examples. My first business where I made my initial $1 million was a company called Vivo. It's the fast-moving goods space, consumer product. The idea is simple. You add starter culture to the milk and make yogurt, kefir, and other dairy products at home. In the US, this is still a relatively underdeveloped market. There are a few players, but the category itself isn't widely popular yet, which means there is a real opportunity to build it. Our plan is to scale through influencers, strong video marketing, and education. To this company, I'm looking for partners who helps me to operate in US and who likes these healthy products. We already have access to nearly $2 million worth of product inventory, so the foundation is there. Now it's about scaling. Another example is Drinkit. We've opened our first coffee shop in LA in West Hollywood. Right now, it's one location, but the goal to scale to 100 locations in 3-5 years. This is fully scalable concept. The founder previously led the corporate chain at Dodo Pizza, the biggest pizzerias chain in post-Soviet Union space. Dodo Pizza works in 26-27 countries and has more than 1,700 locations worldwide. So this is very cool, experienced executive who know what to do. And he has a very strong team who know how to build a huge company and how to scale coffee shops and pizzerias chain. So we have strong operations, deep product expertise. I've personally invested $200,000 in this company, and also I planned to invest $800,000 more. Why? Because the early feedback from US customers have been incredible. You can check it in Instagram. It's not the same like Starbucks, but we have lots of competitor advantage, especially in IT. And for understand that, you need just to visit our coffee shop in LA in West Hollywood. And we're happy to find new partners, new customers, new people who help us to open new coffee shops, and people who helps us by investing in our management company. Another project is Kompozit, a paint manufacturing business. We have invested about $300,000 of our own capital and raised about $1 million in this company. We built a factory in North Florida. The founder has spent his entire life in this industry. He deeply understands the product and the market. The factory has capacity of up to $140 million. Right now, we are at around $100,000 per month in revenue, but targeting $500,000 to $600,000 in revenue per month by the end of the year. Manufacturing is capital intensive early on. You need inventory, you need distribution, you need systems. But once everything is in place, this becomes a classic cash flow business, a strong, stable asset. And given the size of the US market, this could realistically grow into $1 billion company. For context, the market leader, Sherwin-Williams, is worth around $80 billion. Also, I like to compete against Warren Buffett, Berkshire Hathaway structure, because he is 100% owner of Benjamin Moore, and maybe one day we will be one company after acquiring. Who knows? We are also expanding internationally, shipping to markets like Peru and Indonesia. The model includes franchising, opening distribution points across different states. We are currently raising around $1 million in this round and plan to bring in institutional capital next year. Now, one of our strongest company, Twinby, it reached over $12 million in revenue and more than $4 million in net income over the year, and became a top-ranked app in Russia and in other countries in post-Soviet Union space. At one point, it was the #1 most downloaded app in Russia. Over 15 million users downloaded our app. The core idea is dating based on psychology. Instead of just matching people by photos, users go through structured questionnaires designed by psychologists. The system matches them based on mindset. So we are also looking for investors in this company. Another global success is Jet. This year, the company is approaching more than $100 million in revenue. It's currently the #1 app in Brazil in its category. We hold around 1.5% of equity of this company, and also 4 or 5% of this company holds our syndicate. The company is now raising $10 million in debt and $10 million in equity. When company is growing very fast, it makes more sense to stay in and capture this upside. Our long-term goal as a company, Impact Capital, is to become public companies ourselves. A holding company similar in spirit to Berkshire Hathaway. The idea is to bring our portfolio together and eventually list on the New York Stock Exchange. That would provide liquidity for our shareholders and open the next level of growth. Yes, the world is complicated right now. There are geopolitical challenges, but long-term things change. And I strongly believe we will see more open, connected global economy again. That's the future we're building toward. I've covered a lot today, but this is just a small part of the full picture. I go much deeper into these ideas in my book, Shareholder, Big Money and Small Companies. It includes detailed case studies and real investment examples. Important note, the book was written before 2022, before the major geopolitics changes, but the core principles haven't changed. If you are interested, we would be happy to share a copy with you. It's for free. Just scan this QR code and send hello to WhatsApp. I want to share with you our investors' case studies. This is Alexander Burtsev. He was first CTO of InDrive. This is $1 billion company who compete against Uber. And after Alexander earned his millions of dollars, he put this money to some Swiss bank. He started to lose it. So after he lost 40% of his money with broker, we started to manage his money and doubled it in 3 years. Next case is Alexei Sidelev. He's a developer from Cyprus, and he earned 5 or 7% on a real estate. He spent a lot of time to personal deals, so he tried to control everything, but it was illusion. We take his money and started to manage on the stock market and earned 17% in euro for the first year. All his assets, of course, was liquid, and it was 0 personal time required. He controlled everything via phone. Of course, after that, he started to invest with us in private equity, also part of his profit, and now he is a shareholder of our paint factory Kompozit, because he is a developer, he understands this business very well. What I want to say is that when you enter the stock market, you can experience negative periods. For example, since the beginning of this year, the US market has declined while the Russian market has grown. Also, only certain right stocks actually draw that grows. In the short term, it's absolutely possible to see losses. You can sit for 3 months or even 6 months in the negative. In some cases, you might even end a year at loss or break even. Around 5% of our clients' brokerage accounts are currently negative, and those users tend to leave dissatisfied. But this is a very small share relative to the whole base. If you slightly extend the time horizon and ask what period you should actually evaluate results over, the picture changes completely. Over 5 to 15 years, with the return we generate, money can grow many times over a 25 years horizon, closer to retirement, that growth can reach hundreds of times. This is absolutely realistic, provided you think long term. In real life, especially in a business, energy and motivation can fade and difficult situation can arise. I see many people from our region living abroad who struggle significantly due to a lack of money and passive income. At the same time, I also see people who have built this financial foundation, and because of it, they are able to start over and grow much more easy in a new country. That's why this perspective is critical. You can't ignore it, and you shouldn't let short-term negative periods define your decisions. Always think in long-term horizons. By the way, brokers, I personally often tend to manipulate these fluctuations, but usually in a positive direction. They take a very short time frame and say, look, stocks grew 40% in a short period. But that kind of snapshot doesn't mean much in reality. You should always look at a very long time horizon. Only then can you get an objective measure of investment performance. To summarize, there are several common attitudes I've encountered many times. I only invest in what I understand personally. They will definitely trick me. I want to earn money, but I'm not ready to wait years. Give me guarantees that stock won't fall, and many other typical objections. The most common one is, now is not the right time. I should wait a bit longer. But there is another approach. You can start with a small amount and then compare performance over time. You can also try different asset managers, us or others, and see who manage your capital better. That's completely normal. It's nothing personal, it's business. You should trust professional investors who have verifiable track record. For example, companies like Technored, Jet, Twinby, Doda Pizza, and even our yogurt starter startup. There is a lot of public information about them. You can read about them, talk to former employees, partners, and verify everything I'm saying. For instance, our scooter company Jet have issued bonds on the Kazakhstan exchange and are planning to do so again. Everything like this is verifiable. Companies simply don't get listed if there is anything questionable. They go through detailed audits and checks. In general, the rules are quite simple. You can see them on the screen, and I strongly recommend following them if you want to achieve financial freedom. Other investment benefits I mentioned. And I like to finish my mentioning a few additional benefits that I personally took away from this. I don't know how important they are for you, but for me, they matter a lot. Not necessarily well-known figures, but still very influential in my personal experience. Many of you probably knows the name of Oscar Hartman. He's one of the famous business angel in the world. Also, here is a photo founder of Doda Pizza, one of the biggest pizzeria chain in the world, and also CEO of Berkshire Hathaway, Greg Abel. I like to work with an amazing professional. I like to work with nice people, and this is a part of my business. This is a part of private equity investments. When you are invited on stage right after someone like $100 billion company CEO has spoken, or when you are honored at chambers of commerce events, receiving international awards and recognition, it all feels impressive and inspiring. But still, none of this is the most important thing. What matters most to me personally in mission? So what is money actually for? You start with $100,000. Then it becomes $1 million, then $10 million. And then what? You got for 100 million, 200 million, half billion. It becomes an endless race for money, more money. And then life ends. I believe the main thing more gives you is the ability to create impact. That's why I named my company Impact Capital. The key word here is impact, influence. For me, when you have free capital, significant wealth, and passive income, it gives you the ability to influence the world around you. And that is a serious responsibility. Or if you are a grounded person, your circle of responsibility naturally expands. When you have no money, your world is mostly centered around yourself and basic needs: where to sleep, what to eat, and simple pleasures. When you start earning money and gain some stability, you begin thinking about building a family, buying a home, creating a foundation for your life. Later, your sense of responsibility grows further. You start caring about your immediate environment. You notice things like cleanliness in your building. You're engaged with management companies. You might take part in planting trees in your neighborhood. As you become more stable, your impact expands to the city level. You organize your support local festivals, participate in charitable programs, and so on. Take the Warren Buffett, one of the world's largest philanthropists, or Bill Gates, who after Microsoft focus on heavily on solving global issues like access to clean water, sanitation in Africa, and investing billions into philanthropy through this foundation. At an even broader level, some people move into planetary scale challenges, space exploration, and advising humanity itself. People like Elon Musk and Jeff Bezos are examples of individuals who have already proven everything on Earth and are now working on pushing humanity forward. And in a way, life is exactly this kind of game. Personally, I would say I'm currently at the my country level on this journey. I care deeply about what's happened, and many of the things I do are aimed at trying to contribute to change and improvement. For me, this is also personal because I have both Russian and Ukrainian roots, 50-50. So everything that is happening is not abstract for me. It is something that feels deeply emotional and painful. Of course, one individual, even with the millions or tens of millions in capital, cannot change tectonic scale events alone. But you can still influence, act, speak, and contribute in your own way. And the more people who choose to be engaged and responsible, the faster positive change can happen. That's a direct relationship. So the goal is to become financially free, responsible, and capable of moving step by step up this ladder of impact. And I genuinely wish that for you. All contact details are here. If you enjoyed this, feel free to like it. And thank you for staying until the end. It became much longer than I originally planned, but I hope it was valuable. Here is the WhatsApp, Telegram, if it's more useful for you, my email, and all other contact. We gives you free portfolio review and financial plan creation as a gift. See you next time, friends. Take care.